Hey there, welcome to Top Crypto Central. If you've ever felt like the world of digital currency is a labyrinth of mystery, you're not alone. Today, we're embarking on an exciting journey into the heart of one of the 21st century's most fascinating innovations, cryptocurrency. Cryptocurrencies have been reshaping how we think about money, and in 2024, they're more relevant than ever. But where do you even begin to understand them? Right here, my friends. Top Crypto Central channel is here to guide you through the ins and outs of cryptocurrencies, making it super accessible and easy for beginners. Whether you're curious about Bitcoin, itching to understand blockchain, or just want to know how to get started, this video is your one-stop beginner-friendly guide to understanding the world of cryptocurrency in 2024. So let's dive in and demystify the digital coins of our time. 1. What is cryptocurrency? So, what exactly is cryptocurrency? Imagine money, but in a digital form, operating independently of traditional banks and governments. That's cryptocurrency for you. It's a revolutionary concept that combines technology, finance, and yes, a bit of that rebel spirit. Cryptocurrencies are digital or virtual tokens that use cryptography for secure transactions. The beauty of it? They exist on decentralized networks, built on something called blockchain technology. This means no single authority has control over them. Power to the people, right? And here's a fun fact. Bitcoin, created by the mysterious Satoshi Nakamoto, was the first cryptocurrency, which started this whole digital revolution. But Bitcoin is just the tip of the iceberg. 2. How does cryptocurrency work? Now, let's unravel the magic. How does cryptocurrency work? It's like a massive, secure digital ledger. This ledger, or blockchain, records every single transaction across a network of computers. What's cool about this? It's incredibly secure and transparent. Every transaction is verified and recorded, making it nearly impossible to hack or cheat the system. Every time someone buys, sells, or transfers a cryptocurrency, it's recorded on this blockchain. And once a transaction is added, it can't be changed. That's the trust factor in cryptocurrencies. This technology isn't just about sending money. It's paving the way for smart contracts, digital ownership, and so much more. Also, mining. Not the one with pickaxes and helmets, but equally exciting. It's a process where powerful computers solve complex mathematical puzzles to validate transactions and add them to the blockchain. And guess what? Miners get rewarded with newly created cryptocurrency. How cool is that? But remember, while the blockchain is super secure, you must keep your digital wallet safe. Think of it like protecting your own little treasure chest. 3. Types of cryptocurrencies. Now, let's explore the colorful world of cryptocurrencies. While Bitcoin might be the king, there are thousands of other cryptocurrencies, each with its unique features and purposes. Cryptocurrencies can be broadly categorized into several types based on their functionality, purpose, and underlying technology. 1. Bitcoin. The first and most well-known cryptocurrency, primarily used as a digital form of money and a store of value. 2. Altcoins. All cryptocurrencies other than Bitcoin. Examples include Ethereum, Litecoin, and Ripple. They often offer different features and technological advancements compared to Bitcoin. 3. Tokens. Created on existing blockchains, tokens can represent assets or utility and are often used in decentralized applications, DApps. Examples include ERC20 tokens on the Ethereum network. 4. Stablecoins. Designed to minimize price volatility, stablecoins are usually pegged to a reserve asset like the US dollar or gold. Examples include Tether, USDT, and USD Coin, USDC. 5. Privacy coins. Focused on providing enhanced privacy and anonymity for transactions. Examples include Monero and Zcash. 6. Central bank digital currencies, CBDCs. Digital forms of fiat currencies issued and regulated by central banks. They are not decentralized like most cryptocurrencies. 7. Utility tokens. Used to provide access to a specific product or service within a network. An example is Filecoin, which is used for decentralized file storage. 8. Security tokens. Represent ownership in real-world assets and are subject to regulatory oversight. they can represent shares in a company, real estate, or other assets. 9. Meme coins. Often created as a joke or for a particular online community, meme coins like Dogecoin and Shiba Inu gain popularity and value through social media and community support. Each cryptocurrency operates on its own technology and has specific uses, from digital payments, decentralized applications, to even creating digital art. The possibilities are endless, and so is the potential. 4. What is the difference between Bitcoin and altcoins? So, what sets Bitcoin apart from the rest? Bitcoin, the first cryptocurrency ever created, is like the godfather of the crypto world. It was introduced by the mysterious Satoshi Nakamoto in 2009 and has since become the most recognized and valuable cryptocurrency. But what about altcoins? Altcoin is a blend of alternative and coin, referring to cryptocurrencies that came after Bitcoin. These include big names like Ethereum, Ripple, and Litecoin. Altcoins often try to improve upon Bitcoin's technology or offer different features. For instance, Ethereum focuses on smart contracts, and Ripple excels in fast international transactions. So, while Bitcoin is like the gold standard in crypto, altcoins provide a diverse ecosystem, each with its own unique flair. 5. How does cryptocurrency work? Let's demystify how cryptocurrency works. Imagine a digital currency that operates independently of central banks, using a technology called blockchain. This technology is like a public ledger that records every transaction in a secure and transparent way. Every time someone buys, sells, or trades cryptocurrency, it gets recorded on this digital ledger for everyone to see. This ensures transparency and security, and the best part, it's decentralized, meaning no single entity controls it. 6. What is blockchain technology? So, what's this blockchain all about? Think of it as the backbone of the entire cryptocurrency system. A blockchain is a chain of blocks where each block contains a bunch of transactions. Once a block is filled, it's sealed and linked to the previous block, forming a chain. This process creates a permanent and unchangeable record of all transactions, making it incredibly difficult to tamper with. It's like having a tamper-proof digital history book. Blockchain isn't just for cryptocurrencies, though. It has potential applications in everything from healthcare to voting systems. The possibilities are endless. 7. How does crypto mining work? Now, let's talk about mining. And no, we're not talking pickaxes and hard hats here. Crypto mining is the process of validating transactions and adding them to the blockchain. Miners use powerful computers to solve complex mathematical puzzles. The first one to solve the puzzle gets to add a new block to the blockchain and, as a reward, earn some cryptocurrency. Mining serves a dual purpose. It's how new coins are created and how the network confirms new transactions. It's a critical part of maintaining and securing the blockchain. 8. What are crypto exchanges? First up, what exactly are crypto exchanges? Think of them as the stock markets of the crypto world. These are platforms where you can buy, sell, and trade cryptocurrencies. Want to exchange your dollars for Bitcoin? Or maybe swap some Ethereum for Ripple? Crypto exchanges are where the magic happens. These exchanges are crucial for the liquidity and accessibility of cryptocurrencies. They come in many shapes and sizes, each with its unique features. But the key distinction? Whether they are centralized or decentralized. Let's break that down. A. Centralized exchanges, CEX. Centralized exchanges, or CEX, are like the traditional banks of the crypto world. They act as a middleman in your transactions. Think of platforms like Coinbase, Binance, or Kraken. They offer user-friendly interfaces, a wide range of services like trading pairs, and often additional features like wallet services or even educational resources. The upside? They're generally more user-friendly, especially for beginners. Plus, they offer higher trading volumes and liquidity. The downside? Since they're centralized, they hold your funds, which can be a risk if the exchange is hacked. B. Decentralized exchanges, DEX. On the other side of the coin, we have decentralized exchanges, or DEX. Imagine a marketplace without any central authority. This is the crypto purist dream. DEX platforms like Uniswap, SushiSwap, and PancakeSwap operate on blockchain technology, allowing direct peer-to-peer transactions. The big plus? You have complete control over your funds. They stay in your wallet until the transaction is complete. It aligns perfectly with the ethos of decentralization in crypto. The trade-off? They can be less intuitive for beginners and might have lower liquidity compared to their centralized counterparts. So, centralized exchanges are like your one-stop shop for crypto trading with added services, but with a third party in control. Decentralized exchanges, meanwhile, offer a more hands-on approach, keeping you in the driver's seat of your transactions. Whether you choose a CEX or a DEX, remember, knowledge is power in the world of crypto. Don't forget to like, share, and subscribe for more insights, and drop your questions or experiences with crypto exchanges in the comments below. 9. Why has crypto become so popular? Now, you might be wondering, why has crypto caught the world's attention? Well, let's break it down. Cryptocurrencies offer several advantages over traditional banking systems. They bring decentralization, meaning they aren't controlled by any single authority like a bank or government. This aspect appeals to those who seek more financial autonomy. Plus, the potential for high returns on investments has attracted many. Cryptocurrencies have shown exponential growth over the years, though they come with their share of volatility. And let's not forget the innovation factor. Blockchain technology, the engine behind crypto, is groundbreaking and has applications beyond just currencies. 10. What to consider before investing in cryptocurrency. Before you jump into investing in cryptocurrencies, there are some critical factors to consider. The crypto market is known for its volatility. Prices can skyrocket, but they can also plummet. It's essential to understand the risks involved. Do your research, understand the technology behind cryptocurrencies, and stay updated on market trends. Also, think about diversification. Don't put all your eggs in one basket. Spread your investments across different cryptocurrencies. And very importantly, only invest what you can afford to lose. The crypto world can be unpredictable, so it's wise to play it safe with your financial commitments. 11. How to invest in cryptocurrency in 2024. Whether you're new to the crypto world or looking to refine your investing strategy, there are critical steps to consider before investing in any crypto project. Step 1. Understanding the crypto market. Step 1 is all about education. Before investing a dime, understand what cryptocurrency is and how the market operates. It's a volatile and innovative space, vastly different from traditional markets. Stay updated with the latest trends, technologies, and regulatory changes in the crypto world. Step 2. Setting investment goals. Next, set clear investment goals. Are you in for the short-term gains or the long haul? Your strategy should align with your financial goals, risk tolerance, and investment timeline. Remember, there's no one-size-fits-all in crypto investing. Step 3. Choosing a crypto exchange. Now, let's choose a platform. In 2024, there are numerous crypto exchanges available, each with its unique features. Look for platforms with robust security measures, user-friendly interfaces, and reasonable fees. Consider the variety of available cryptocurrencies and whether the exchange supports fiat to crypto transactions. Step 4. Creating and securing your account. After selecting an exchange, it's time to create your account. Secure it with strong, unique passwords and enable two-factor authentication. Security is paramount in the crypto world, so take it seriously. Step 5. Funding your account. With your account ready, it's time to fund it. You can usually do this via bank transfer, credit card, or even PayPal on some platforms. Be aware of the different fees and processing times associated with each method. Step 6. Making your first purchase. It's investment time. Start with a cryptocurrency that aligns with your investment goals. Bitcoin and Ethereum are popular starting points, but there are many others to explore. Don't rush. Start small, learn the ropes, and then expand your portfolio. Step 7. Storing your crypto safely. After purchasing, the next big question is storage. Use a secure wallet. Hardware wallets are great for large amounts, while software wallets can be convenient for smaller, more accessible amounts. Remember, the safety of your investment is in your hands. Step 8. Regular monitoring and adjusting. Investing in crypto isn't a set-it-and-forget-it game. Regularly monitor your investments and stay informed about market changes. Be prepared to adjust your strategy as the market evolves. 12. Use cases of cryptocurrency. Cryptocurrency isn't just about investing. Its uses in 2024 have grown exponentially. Let's explore some of them. Digital transactions remain the bedrock of cryptocurrency use. From buying coffee to booking flights, businesses worldwide are increasingly accepting crypto as a payment method. Investment is another major use case. Many view cryptocurrencies as a portfolio diversifier. Think of Bitcoin as digital gold, and then there are those who trade them, much like stocks, aiming to profit from market fluctuations. In 2024, smart contracts are a game changer. They're self-executing contracts with the terms written into code. We're talking about automated legal agreements, streamlined real estate transactions, and more, all enabled by platforms like Ethereum. And that's just scratching the surface. From powering decentralized finance to tokenizing assets like art and real estate, the applications are as diverse as they are revolutionary. 13. Risks and safety tips. But remember, with great potential comes risks. The world of crypto can be a roller coaster of highs and lows. Prices can skyrocket, making fortunes overnight, but they can also plummet, leading to significant losses. The volatility isn't for the faint-hearted. So, how do you navigate these turbulent waters? Start by understanding that cryptocurrency investments should be thought of as a long-term game. Avoid knee-jerk reactions to short-term market fluctuations. It's all about riding out the storms and looking at the bigger picture. Security is another big concern. Sure, the blockchain is a fortress of digital security, but the platforms you use to access it, like exchanges and wallets, might not be. Phishing attacks, where scammers trick you into giving away your information, are common. Scams promising high returns and hacking attempts are rampant in the crypto world. So let's talk safety tips. First, research is your best friend. Understand the ins and outs of any cryptocurrency before you invest. Know its history, its technology, and its market trends. Educated decisions are your shield against volatility. Don't ever invest money you can't afford to lose. Cryptocurrency should be a part of a diversified investment strategy, not the whole of it. Think of it as one piece of your financial puzzle. Stick to reputable exchanges and wallets. Look for platforms with robust security measures and positive user reviews. Remember, the extra steps you take for security can be the difference between a safe investment and a costly lesson. Be extremely wary of offers that seem too good to be true. High returns promised with little to no risk? That's a red flag. Scammers prey on greed and fear, so stay vigilant. In the end, navigating the crypto world safely requires a blend of cautious strategy, thorough research, and a steady hand when the market gets shaky. With these tools in your arsenal, you'll be well equipped to explore the exciting yet unpredictable world of cryptocurrencies. 14. Future of cryptocurrency. Looking ahead to the future, cryptocurrency is poised to become even more integrated into our daily lives. We might see national cryptocurrencies being introduced, wider use in retail, and even more advanced blockchain applications. In 2024, we're at the cusp of a new era in digital finance. The key is to stay informed, adapt, and be ready for the exciting changes this technology brings. And there you have it, a whirlwind tour of the cryptocurrency world in 2024. From the legacy of Bitcoin to the innovation of altcoins, the robustness of blockchain technology, and the fascinating world of crypto mining, we've covered a lot today. Remember, the journey into cryptocurrency is as exciting as it is complex. If you enjoyed this video, make sure to hit that like button, subscribe for more content, and share your thoughts in the comments below. Stay curious and keep exploring. Remember, always do your own research and consult with a financial advisor. This content is for educational and entertainment purposes only.